Good evening, everyone. My name is Mel Kleckner. I'm the town administrator for the town. And this evening, we are going to have really the first budget forum, a public budget forum in my tenure with the town. And very excited about it. It is directly a result of the work of the Brookline Fiscal Advisory Committee, otherwise referred to as BFAC, who met last year and made a number of recommendations. And one of their recommendations was to enhance the understanding of this complicated document and process, to put everyone more on a level playing field, to provide better input from our community, to engage more with our community, and to get better ideas, frankly. And so I'm really excited about providing this budget forum this evening. Why don't we, I am going to show a slide deck for about 30 minutes or so, going through there's some really complicated items. The idea for tonight is really to try to make it more simple and transparent to everyone. And that means taking a lot of complicated concepts, numbers and things like that, and then trying to explain them in more easy terms. So this is just a first start, and we're going to be doing it at a fairly high level this evening. So for those of you who are really involved in the budget process, you probably know a lot of this stuff, but still, I think it's worthwhile for everyone to hear it at this level and think about it at this more broad level. So with that, I wanted to introduce some people, but I think you could put the slide deck up, Devin, or Melissa, please. Thank you. So I do want to introduce a few folks. With me this evening is the Deputy Town Administrator, Melissa Goff. Melissa is the town's budget officer, in addition to being the Deputy Town Administrator. And Melissa will help review this slide deck this evening with us, and will be available for questions and answers. Devin Fields is also a member of my staff, and Devin will be facilitating the actual running of this Zoom and the question and answer period. You might be aware of Devin. She does the same with the select board and other committees. And because we have limited time, we will provide a limit on the amount of time people can ask questions or make statements. And so, Devin, thank you for your support tonight. I'd like to introduce just a couple other people on the town staff that are part of the town's budget process. I won't promote them, but they are in attendance this evening. The first is Gina Franconi. Gina is the town's finance director and also the town treasurer, and is very involved in the numbers and putting together, helping put together the budget. And then also Justin Casanova Davis, an assistant town administrator in my office, who is a fantastic budget analyst and otherwise a great management assistant for me and for the town. So thank you to Melissa, Devin, Gina, and Justin. I also want to acknowledge there are select board members here. Bernard Green, our chair of the select board, is here, along with Nancy Heller. There may be others, but I'll introduce them as I become aware of them. And also Michael Sandman, who is the chair of the advisory committee. I want to thank you for being here. Members of the school committee may or may not be here tonight. They just concluded their legislative forum, and I understand they have a subcommittee meeting tonight. But I hope they're here and then can help with any questions and answers that might come up that are relevant to their area of expertise and jurisdiction. So thanks. Could you, at least on my slide, my computer screen, could you make that a little smaller? There you go. That way, at least I can see the full slide. Devin has noted in the chat that you can use the Q&A feature in Zoom to get in line and indicate that you want to ask questions when that time of the event or time of the forum is available. So with that, I'm going to go right into the slides. So as I mentioned before, really what I would like to do this evening is to try to talk about fairly complex topics, but put them in a little bit easier to understand terminology and approach. So Municipal finance is really the overall discipline of the town's financial capacity. It encompasses ongoing planning, budgeting, accounting, and evaluation of all the town's financial resources. And this goes on. The town's always in a budget, or it's in its municipal finance cycle. It gets audited once a year, but the municipal finance is the overall picture. The budget is within the municipal finance, and the budget is a one-year plan. It's a budget that's appropriates funds for the operation of school and municipal services and other financial obligations of the town, but for only 1 year at a time. And it fits into the overall municipal finance realm. And then the capital improvement plan, which we refer to as the CIP. It's a legally required document of the town, and it requires the town administrator to prepare a 6-year plan of our capital expenditures and how to finance them. What you should know is that the first year of the 6-year plan is always actual capital projects that are appropriated as part of the town's annual budget. So those are 3 concepts I wanted to mention, and also wanted to confirm and emphasize the role of the Brookline Fiscal Advisory Committee. We called it BFAC, but they met for almost a year last year and had an extensive report. And the report focused on really the strength of the town's overall finances and its capacity to have better data, more robust public input, and improved processes to address the ongoing disparity between revenues and expenses, which we often refer to as the structural gap. So the select board, when it appointed the BFAC, made sure it was looking at things long-term and wasn't just trying to resolve the latest budget deficit in fiscal year 21 or 22. It was really looking at a bigger picture. And I'm very pleased and indebted to the BFAC for their recommendations, and we will talk about them throughout this presentation this evening. So what is the budget? The budget is a legally required process. It involves a formal vote of appropriation by our town meeting, which is the town's legislative body. It's only limited to 1 year at a time. It's based on not on a calendar year, but a fiscal year that runs from July to June, those 12 months. That's the same fiscal year that the state government operates on in every one of the 351 cities and towns. Our budget must be balanced, unlike other levels of government that don't have to do that, but we have to do that. So, and we can't just put it together and hope, nobody checks the numbers. It's subject to state approval. And every year the state approves our budget. They look at all of our budget projections. They look at the appropriations that town meeting made, other obligations of the town, and they approve it. And by approving it, they are then allowing the town to set its tax rate and send out our tax bills. So obviously, it's very important to get state approval. And then finally, it's both a financial plan as well as a plan that reflects the town's priorities and goals. So the budget to some people is just numbers that, the revenues and the expenditures have to equal themselves out, and they provide a funding level for all the town departments. It's like an accounting document, but it's much more than that. And really the town's budget, or a financial plan as we call it, has to reflect the town's priorities and goals. That's hard often when there is restricted funds and a lot of competing priorities. But I think we always have to remember that how we spend our money is really how the town is reflected in its own priorities and goals. Thank you. I want to talk now about the budget process and the players who are part of that process. The 3 bodies that are on this page, on this slide, are you'll find in legal documents. They're legally required to act on the town's overall budget. So the town administrator, that's the position that I hold, must prepare a proposed budget. As I think you all know, a budget is an executive function, at least the preparation of the budget. It's approved by a legislative body, but it's such a complicated document, and it has to be balanced. So it has to be proposed by someone in charge of the organization. And that is the role that I have. And that is vested in the Town Administrator Act, which is an actual state law that sets up the way the town is organized. The Town Administrator Act requires me to submit my proposed budget each year by February 15th. So obviously we have about one more month to go before that happens. The Advisory Committee is the required finance committee under Massachusetts law. So Massachusetts law for towns requires a finance committee, and the Advisory Committee serves that role. The committee is independently appointed by the town moderator. And they are charged with evaluating and making recommendations directly to town meeting on the budget and any other proposed financial appropriations. It happens that our advisory committee, the reason why it's not called a finance committee, in addition to doing those recommendations on financial matters, they also make recommendations on any other proposals before town meeting, whether it be a zoning bylaw, general bylaw, a resolution, acceptance of a state law or whatever. So our advisory committee is more than a finance committee, but it does serve the role of the required finance committee under Massachusetts law. And to be very clear, the committee's recommendations are the budget motion that's acted upon by town meeting. So the advisory committee, a very, very powerful player in this process. And the town meeting. We have a representative form of town meeting. Some communities of smaller size have an open town meeting where any registered voter of the town can attend the town meeting. But in our case, we have a representative form of town meeting elected by our 16 precincts. The town meeting is the legislative body. They approve the budget. They approve any issuance of debt, acquisition, disposal of property, and the passage of all local laws. The one thing that town meeting, or there's a few things that town meeting cannot do under law relative to the budget, is they cannot bind future operating budgets because it's a one-year plan. They cannot unduly limit executive discretion, and that is somewhat of a contested point. As you may recall, or some of you may recall, last year, town meeting, when it passed a budget for the legal department, it created a condition that said the selectmen couldn't act on, do certain things with a certain case that's before the town. And the town council, as well as majority of the select board, felt that that was unduly limiting executive discretion because the general laws, or excuse me, the bylaws of the town do grant the select board the sole discretion to determine how they would act on legal matters before the town. So that's somewhat still in some dispute. But what's not in dispute is that the town meeting cannot restrict the school committee's legal authority. The town meeting has bottom line budget authority, so it approves the bottom line of the budget for the school committee, but it may not exercise any further discretion and compel the school committee to spend the money on certain things versus other things. Now, not specifically enumerated in the law around the budget, but obviously very important players in the town and as a result in the town's budget is the select board. The select board is the chief elected body of the town, and they provide policy, direction, and authority to me as the town administrator. They appoint me. And so I'm obviously interested and obligated to adopt or to implement the policy that the select board votes on. And so I'm constantly seeking direction. They're constantly providing me direction. And when I'm putting together the budget, I'm always considering, what the select board's priorities are. So the board, although they're not required to do so, they also fully vet the town administrator's proposed budget. So they're really doing a parallel process, although more general than the advisory committee is doing. But they're doing the same process during the same time frame where they're looking at each town department or each proposed expenditure and holding a hearing and then making recommendations. Eventually, at the end of the process, if there are differences of of opinion between the select board and the advisory committee. It is the advisory committee's budget that goes before the town. The select board and the advisory committee try to reach some consensus. It makes it easier if possible. But if not, the select board would have to, like anyone else, have to amend the advisory committee's budget at town meeting. School committee, of course, largest budget in the town. The elected school committee is the legally responsible body in control of the school department. There are laws, I think, that relating to the school committee's preparation of the budget, of their budget, in terms of the timing and the process that they need to do to submit a budget for consideration. The budget in the school department, like my budgets for the town, are prepared by the school superintendent, and then they're approved by the school committee and go to the town administrator and advisory committee. As I previously noted, the town retains bottom line budget authority and cannot restrict or compel the school committee how to allocate or expend its budget. And then this body called the Town School Partnership, which I know has, it was a big subject of consideration by the BFAC. This Town School Partnership, you won't find it anywhere in law. It really is just a local solution, a practical solution that was designed to facilitate communication and collaboration on the budget process and other matters amongst the select board, school committee, and advisory committee. And one of the key components of this partnership is a formula that guides the town administrator's initial allocation of available revenue to the school department. And we'll talk about that a little later. But the Town School Partnership does act publicly. All their meetings are posted and currently are streamed, but it has no specific legal authority. It's really just designed to facilitate communication between the bodies and provide the town administrator and the school superintendent with opportunities for input. I know a lot of people believe that this is sort of where all the deal is made, and to some extent, there is a lot of discussion. I mean, these are the major bodies involved, but they don't have any legally binding authority, and the town administrator still submits his or her budget to the advisory committee, and that process moves forward. So we can talk, I'm sure there'll be questions about the Town School Partnership. BFAC did recommend that the Town School Partnership be reformed, be more open, be more transparent, and not be viewed as a sort of an inside game, if you will. And then there are, moving on, there are other important stakeholders. Clearly, all the municipal departments, and I include the school department there, all the boards and committees. That's where you find a lot of the budget priorities and ideas being formulated. And they move up the ladder and go through the budget process. So municipal departments and boards and committees are really the ones who are preparing the proposals for the town administrator. The state, the Commonwealth of Massachusetts, a huge player. There are the budget process and generally municipal finance is highly regulated in the state. And there's many mandates. I always say, if there's something creative that we want to do, give me some time and I'll find out how the state regulates or mandates against it, or creates impediments to that. The state is a huge player in our budget process, and a lot of times BFAC was one of those, why can't we do this? And then we have to say, well, the state does not allow that, or state legislation or the Constitution doesn't allow that. So state is a huge player in our process. The independent auditors, every year, we have an annual audit of our financial books, and quite often the auditors will identify areas that we ought to be more focused on, or maybe changes in auditing accounting practices or new laws, reserves, long-term financial liabilities. They're often good advisors for us. Bond rating and agencies and investors. Here again, they're not in any law, but we have to make them happy. The town's budget, and especially our capital improvement program, relies on us going to the bond market and selling in municipal bonds to investors. And bond rating agencies independently evaluate municipalities for their credit worthiness. And the more credit worthy you are and the stronger your financial system is, the lower the rate you are going to be able to go to the bond to borrow money. And so we're constantly referring to our AAA bond rating. We're very proud of it, but more than being proud of it, it saves the town a great deal of money, especially in this environment when the town is going to the bond market quite a bit for its school projects. So bond rating agencies, investors are really important, and BFAC will, you'll see in the BFAC report, if you review it, that they spent a great deal of time talking to the rating agencies. The one we use mostly is Moody's, but we also have used Standard & Poor's. Sometimes we need 2 ratings, but most often we go with Moody's. And we spent a lot of time talking to Moody's and reading reports and how they view credit worthiness of cities and towns. And then last but not least, the community. The community is the people who pay the bills. That's where we get the money from. That's who we're serving. And we have to find a better way to engage with our community. Too many times, and BFAC pointed out that it's really the same sort of people every year are talking about the budget. And we need to find a way to engage our community better. And so they're a big stakeholder. Thank you. So moving away from the process a little bit and looking at the components of the town budget. So the town's budget, like any other budget that you've ever been involved in, deals with, on the one side, revenues, how much is available or how much the town in this case is willing to raise, and expenses on the other hand, and they have to balance. The other components of a town budget that's different perhaps than other organizations, private organizations, is that it's based on funds. The largest of the fund is the general fund, and that's where, you know, most of what we're talking about tonight is in the general fund. But we have other funds. Most prominently, we run our water and sewer operation as a so-called enterprise, and we separate that from, it's fully funded from fees, from the rates, the water and sewer rates. We also have our golf course, which operates on a totally off budget through an enterprise. And so all these funds are legally required funds. And when you see the town budget, it's made up of all these funds. But I think it's important to understand it's the general fund that we have the most discretion and ability to manage. And our budget happens to be what's referred to as a program budget. It's a program-based format. So in other words, instead of just appropriating a budget for the Department of Public Works, we have multiple programs within Public Works and we appropriate them individually. So for example, we have snow removal or parks. In the fire department, we have fire prevention, or in the police department, we'll have investigations. So we break the budget down. The town meeting is appropriating the budget, with the exception of the school department budget for the reasons I previously stated. But they're basing it on the programs the town is providing, as opposed to just lumping it all in a town Department of Public Works budget. But even though we have program-based budgets, they're all very detailed. They have so-called line items, and those line items are essential to facilitate the accounting and other systems that record and control actual revenues and expenditures as the fiscal year is going through. So all these, every dollar that the town meeting appropriates is included in a detailed line item within these program budgets, and converted to a chart of accounts. It's a data processing system that controls the purchasing, the expenditures, and all that stuff. So a little bit about the budget. Next slide. This tells you a little bit about the general fund. This is our budget. So if you look on the right in the yellow, you'll see the general fund, and then below the general fund, you have operating budgets and other special appropriations. And then on the left, you see the enterprise funds, or in some cases revolving funds. And those are those self-supporting operations. In the case of the town, we have the water and sewer enterprise, the golf course, and the recreation revolving fund, which manages ongoing programs that are fee-based. And then you have the capital improvement plan, that 6-year plan I mentioned, that's part of the overall budget. So let's take a look at the budget and what makes up the revenues and expenditures. I know the slides are a bit small depending on your device, but wanted to show you that this is the so-called fiscal year 2021 budget, and we're right in the middle of fiscal year 2021. As you know, it started last July. It's going to June 30th. So we're right in the middle of our fiscal year 21 budget. But this is the way the budget's split up. This is the whole budget, right, Melissa? This is all the funds, general fund, enterprise. So it's all in. It's $318 million. That's a large number. It's more than a $250 million, and it represents about 4.4% higher than the prior year. And we'll talk about these numbers. And then, of course, the expenditure side, it matches that. And there's where you get the municipal departments, the school department, and all of these other categories of budgets or areas that the town appropriates. $318 million.
Well, I will just mention that this is just the general fund, and
Okay.
that the revolving funds are added on top of that. It's about $30 million for all of the revolving funds. And I saw a question earlier about water and sewer. So when the water and sewer or the golf budgets are set, they also have the same requirement where your revenue has to match your expenditures.
Thank you. So this does not include the enterprises, or does it? Yes, it.
No.
Well, it is in the pie chart, however.
Yeah, it is in the pie chart, but it's not in the detail that you see on the left.
Okay, good. Thanks for clarifying. So on the left, you see the general fund budget of the town, $318 million. On the right is a fully loaded budget, and you'll see the enterprises there. But I want to go through each component of the pie chart with you tonight and show you, talk a little bit about those components. So by far, the largest revenue source of the town is the property tax. The property tax makes up 73%, almost 3/4 of the town's general fund revenue. So obviously a large portion we have to pay attention to. I previously mentioned that the state controls a great deal about how the town's finances work. And I know this will come up, I believe, in the question and answer format, is why can't we levy an income tax or some other kind of tax that you might see in other cities like New York City or other places? We cannot, because the state law, whether it's the Constitution or just general state laws, do not allow cities and towns from levying other taxes other than real and personal property. So it's important to know. So 73% of the town. And here's where we have to talk about Proposition 2.5. So in Massachusetts, in the early 80s, following the local tax limitation movement that started in California and went across the country to Massachusetts in 1980, I believe it was, state passed a law called Proposition 2.5. And that limited the property tax. Prior to that, towns were really not, really just politically restricted as how much they could really send over to the voters to fund. So in the early 80s, Proposition 2.5 was passed, which restricted local cities and towns' ability to raise property taxes. So it's called Proposition 2.5 really for two reasons. There's two components of Proposition 2.5. One is that our tax levy limit can never exceed 2.5% of the town's overall value. That was a concern in 1980, but since then, especially in Eastern Massachusetts, property values have skyrocketed so much that we're not even close to that limit. So we don't really have to worry about the fact that our taxes are exceeding more than 2.5% of the town's overall property value. I don't know where we're at, but we're far lower than 2.5% of our overall value. But the more immediate and practical implication of Proposition 2.5, the other part of the 2.5 says that you may not increase your annual tax levy more than 2.5% than the prior year. So that's a pretty significant limit, especially when there are inflationary factors and other factors that come down. But we are limited, and every city and town is limited to not levying more than 2.5% of their taxes than the prior year. However, there are some additions, and I know you know that because you get tax bills that are more than 2.5% from the town. There are a couple other things that are added on top of the 2.5% limit. One is called new growth. And that means that if there's a new building, for example, our new hotels that have been built along Route 9 or now in at the Emerald Island, any new construction of that amount, and even the kind of construction that you may do in your home, if you renovate your kitchen or you add a dormer or anything like that, that's considered new growth, and it's not limited to the 2.5%. You can levy whatever your tax rate is against this new growth, and I'm going to show you in the next slide the value of this, but that's essential to the town, and that's why economic development is so important to this town. In addition to making the tax burden equalized among the residential taxpayers, it also provides this new growth that helps fuel our budget. The other thing that is on top of any annual 2.5% limit is tax overrides and debt exclusions, and they're not the same thing. I know a lot of people, we refer to the overrides in a general sort of way, but overrides and debt exclusions are two different things. And both of them, by the way, have to be approved by the voters. They have to be approved by both the town meeting, the appropriation of money, but also approved by the voters. And but they're different. Overrides are permanent increases in the town's tax levy. So let's say the town approved a $2 million override. Our tax levy would be increased by $2 million, and it becomes part of the base forever. So future 2.5% increases are applied to that new amount. Those are tax overrides. That's why they're considered permanent. Debt exclusions, on the other hand, are limited in time. They are only allowed to be on the tax rate for as long as the town is incurring debt for a particular project. So whether it's the high school, the Ridley School, or whatever the town borrows money for, we are, if the voters approve, we are able to include the cost of the principal and interest on that debt on top of our 2.5% levy limit. But once that principal and interest debt goes away, once it's paid off, then it comes off the property taxes. So I know these are long. Many of our bond issues are for 25 years or more. And when those are over, we always find a project to sort of take its place. So they may feel permanent, but debt exclusions are temporary tax increases. And then I also want to talk about the Community Preservation Act. Town meeting just approved at the last town meeting the town to levy additional taxes to meet the Community Preservation Act, otherwise referred to as CPA. This is not covered by Proposition 2.5. This is really separate. It's sort of on top of the tax bill. In the community where I live, there is a Community Preservation Act, and so when I see my tax bill, I see the regular tax bill, and then it's spelled out the CPA, because it's not quite like taxes. It's levied in a different sort of way. I'll go back just one bit. I just want to remind the community or the people here that on our ballot, the town ballot in the spring, the Community Preservation Act will be on the ballot. So that's one of those similar to overrides and debt exclusions that town meeting approves it, and then it has to be approved by the voters. The Community Preservation Act, we're not going to talk a lot about today but it's a restricted thing, and it's sort of separate from Proposition 2.5 and the regular tax levy. Thank you. So I want to go through how we calculate the tax levy using these add-on types of components. So in fiscal 21, the year we're in, the prior year tax levy was $298,737,000. And we could increase that levy by 2.5%. And that generated $5.8 million. That's our 2.5% increase. That's what, it's fairly easy to actually budget and project the tax levy because it's so formulaic. But so 5.8 was a 2.5%. And then we add on to this new growth. So we were able to tax the value of new construction, new projects, new development in our community that generated $3.3 million. That was huge. That's why it's so important for us to promote a good economic development. And then finally, the debt exclusion, large number there. This is all new debt exclusion numbers. Is that right, Melissa? This is new, or is this?
These are the debt service costs associated with the projects that we've currently borrowed for. So in fiscal 21, that last March, we borrowed for a piece of the Driscoll School. And then the Florida Ruffin Ridley School and the high school were already on the tax roll. So the combination of those three projects represent that $13 million number.
So this is our cumulative debt and interest that's been excluded from the tax levy.
For fiscal 21, yes.
Thank you. So there you get a total tax levy of over 255 million. And that's why when you see your tax bill, typically, there's debt exclusions or overrides in there. And that's why it's higher than the average 2.5 or the restricted 2.5%. There's also stuff that goes on that changes people's burden of the taxes, depending on whether you live in a single family house or a condo or so on. And I want to talk about that in the next slide, I believe. Is that, go to the next slide. No, it's actually not until after. That's all right. I want to talk about, at the end of all this budget process, the select board talk about allocating the taxes. So it's not just a single tax rate in Brookline, and we'll talk about that. But let's go now to the revenues. We talked about property tax. The next big category is state aid. So in Massachusetts, the state shares some revenues with each city and town, primarily because the schools are obligated to provide public education. The state is provided to provide public education. It's a mandate. That's why there's lawsuits and things in the state about equity in school financing. So we get money from the state. If you can see that, we're now down to 6.4% of our budget is from state aid, and that continually is eroding. It's eroding because the state is just not able to fund overall state aid, but also because Brookline and the position we're in, whether it's our equalized value or the wealth in our community, we're getting squeezed by state aid, and now we're down to 6.4%. That is made up of a few different categories. One is UGGA, otherwise referred to UGA. It's unrestricted general government aid. And then there's also a large category state called Chapter 70. And it's an educationally based formula, but it's not directly earmarked to the schools. But as it turns out, we appropriate a lot more money than we get from the state in Chapter 70. And then there are a few reimbursement programs. You see that word cherry sheet there. Old timers refer to state aid as the cherry sheet. That is sort of a historical terminology because when the state aid document was distributed, it was done on cherry colored paper. So if you hear somebody call something the cherry sheet, it's the document that the state provides each city and town that lists the amount of state aid as well as the the expenses from the state that they charge us. Now, there's a lot of other federal, state, and state grants that the town receives, but they are sort of off budget. Town meeting doesn't appropriate them, but we have to take those into consideration when we're putting together the budget. Some of the major federal and state grants are Title I education for education, mostly I think special education, community development block grants we refer to as CDBG, and by virtue of the town's population, Congress provides us, we're an entitlement community, so we are granted community development block grant funds for special purposes every year. The state provides additional so-called circuit breaker funding to the schools to help with special education expenses, which are extremely expensive. The format for special education in Massachusetts is it's one of those mandates I referred to. That's very expensive. And then finally, most recently, we've gotten pandemic aid, CARES, FEMA, and now a new category called ESSR, which I believe is elementary and secondary school relief fund or something like that. So we're still trying to work on those, and those are part of when we put together the budget, we need to know what our federal and state off-budget grants are and how we can use that. Typically, they're very restricted, so they're not part of the general fund. Local receipts. Local receipts are a very large category of the town's budget, and as I look, they're 7% of the overall pie. This is things that we decide or we have more control over. I did mention before that the state restricts the amount, the kind of taxes that a town can levy to property taxes, but there are a few taxes in here that are considered local receipts. Motor vehicle excise taxes. So if you own a vehicle, that's actually personal property. So we've been taxing motor vehicle excise at 25 cents per thousand value of the vehicle for a long time. But new taxes that have come on are sales taxes and hotel meals taxes. So we are now allowed to levy a 3% tax on all cannabis sales, I should say non-medical cannabis sales. We're also now allowed to tack on to the state's hotel, motel, and meals taxes. We charge local permits for building, other licenses and permits. When we invest money, it all goes into this major category called local receipts. And in addition to state taxes, we'll get to this later, it's the local receipts that have been hit the hardest through the pandemic. Obviously, when restaurants are closed or limited, or there's no hotels and that kind of commerce, we're really seeing a real strong dip in both cannabis sales and hotel, motel, and meals taxes, and some of the other license and permits, for example, parking meter fees and things like that. Let's move on. Other available funds are only about 1.3% of the town's budget, but it is a category of revenue. So I mentioned before our enterprise funds, so water, sewer, the golf course, for example. We do not want to, we have set those up so the town's tax base does not support those. So to the extent that we have employees assigned to water, sewer, or the golf course, we don't want to be charged for paying their health insurance or the allocation of their pension or other benefits. And so we charge the governmental enterprise funds, and they basically transfer money that has been raised by fees to support those costs of the town, so that the town's general tax and general fund doesn't support those. And then there's some other special trust funds and dedicated revenue.
I would just add, Val, that we're legally required to, if there's an employee in the enterprise funds, we're legally required to assess benefit costs for those employees.
Thanks, Melissa. And then finally, our free cash. I hate the word free cash, but it's a very specific term that's used only in Massachusetts. It's not a term I've ever heard anywhere else. It's essentially our year-end fund balance or unrestricted fund balance. But in Massachusetts, it's called free cash because the state takes one last crack at it. We give them our fund balance, and then they say, well, you really should deduct some from that because you owe some money over here, or you have an obligation over here, or you have uncollected revenue and so on. So we call it free cash. I don't like it because it's not free and it's not cash, but it's, so I tend to like to refer to it as the unreserved fund balance. Every year, the town doesn't have a deficit, fortunately, and we also budget conservatively. So to the extent that we get more money than we expected, or we spend less money than we appropriated, that goes into the calculation of the end year fund balance. And we use that end year fund balance as a revenue source. But importantly, it's a revenue source that it's really essential because it's for non-operating purposes, capital projects, reserves, and special purpose. And you see on the left a ladder, but we call it a waterfall. The idea is that the free cash, we have the sequence and use of the free cash is based on a policy that we generally refer to as the waterfall. And so when we have the unreserved fund balance, we use it for these specific purposes and in this order of priority. The first priority, oh, I should say free cash represents 3% of the town's overall revenues. So some of free cash we just don't use. We just leave it in the unreserved fund balance. And that's critical because that's what the bond agencies are looking, the bond rating agencies are looking at. Do we have sufficient financial stability and reserves that if something really bad happened to the town or there was some emergency, that we have the capacity to go after those reserves. So we choose not to appropriate all of our free cash. We hold some back in a reserve. We also appropriate money to our stabilization fund from free cash. The stabilization fund is what I call the town's rainy day fund. How much money is now in the stabilization fund, Melissa? About, is it?
I think I need to put a new battery in my mouse, but I believe it's about 9 million. I think I would probably want Gina to correct me.
Yeah, that's close enough. It's around $10 million, and it's the town's rainy day fund. But it's also there to provide that financial stability and reserves. You know, a town, as you saw before, we have almost a $400 million budget. We're a large operation, we're a large corporation, thousands of employees. And, we have to have financial stability and reserves. We can't just spend every penny we have. That's the case with most, companies and corporations. So anyway, that's the end of the town's revenues. And now I want to move over to the expenditure side of the budget and talk about those categories. So I'll start with municipal departments or town departments. That's in the blue. That's at 22.6% of the overall town budget. And those are the departments and services that you see most every day. Public Works, working on streets, sidewalks, traffic lights, the police, responding to calls for service, doing investigation of crimes, the fire, going out and providing fire suppression, emergency medical services, the library. All those traditional municipal departments are funded out of this group, this blue portion of the pie. The town meeting appropriates these departments not only in the programs I referred to before. So rather than just appropriating money to the police department, we appropriate money to various programs within the police department. And within those programs, there's a further breakdown of the appropriation. So when town meeting appropriates monies in these program budgets, it's splitting up the money between personnel, services, supplies, and capital equipment. And the town departments cannot move that money around. Those are specific legal appropriations that can't be, personnel can only be used for personnel, and services can't be used to hire new people, so for example. The only difference I would say is there is some limited ability in Massachusetts law to move some money around. In that case, we either need select board approval, advisory committee approval, or in some cases we would have to go back to town meeting. And that's very different than the school department budget, which we've talked about quite a bit. The school department budget is appropriated one bottom line. I believe the number was 130 some odd $1 million. And there is no ability for the town meeting to say, you can only use this money for capital equipment or personnel or services. The school committee retains that legal authority to spend their bottom line in the manner, but that's not the case in the municipal departments. And the municipal departments also include, if there's going to be a raise, a collective bargaining agreement that provides a wage increase or any other wage increase, we have to include that in our reserves within our department. So that's always, that's not done in a separate budget. Now the school department. Now you see the school department in the red. That's I believe about 35%. Now we talk about this a lot in the budget because the way the town actually appropriates the school department budget, it doesn't include some costs that are attributable to the school department. Those are covered in other departments. So for example, health insurance for school department employees, unemployment compensation if the school department has to lay off employees, pensions for some school employees, not teachers. Those are appropriated in other budgets. Yet the town does, when it allocates the overall revenue to the school department, does take those into consideration. So even though you see 35% in this pie chart, we produce other pie charts that show a fully loaded school department budget that's closer to 60% of the pie. So that's an important concept. Non-departmental appropriations, they're a large part of the budget. They're almost 29% of the town's overall budget. And that's where you'll see employee benefits, primarily health insurance and pensions. In Massachusetts, state and local government employees are not part of Social Security. There's a state pension system. It's called the Massachusetts Contributory Retirement Pension. And so employees, instead of having funds withdrawn from their paycheck that go to Social Security, it goes to the Massachusetts retirement system. But the town is obligated to pay those pensions when people retire. And that's a huge expense. In fact, we are on a pension funding schedule because we're seriously underfunded in our pensions. There's a term called unfunded pension liability, and we are on an actuarially funded basis that sets aside more than our pay-as-you-go for pensions because the bond rating agencies and the state and others are saying, your budget's not, if you don't cover this liability, you're going to be in trouble. Same thing with other post-employment benefits. We call them OPEB. In Massachusetts, we're obligated to cover the health insurance of our retired employees and their spouse, their surviving spouse. And we're woefully underfunded in that area too. We know how many retirees we have now, we cover them, but what about future retirees? So both pensions and OPEB are in this employee benefit, and we're constantly setting aside money according to our actuarially funded pension funding schedule. So health insurance, sometimes we call this area a budget buster because both health insurance and certainly pension funding exceed the rate of inflation. For health insurance alone, we're going to be increasing that budget by about 5%. That's not bad compared to historical, but certainly inflation is nowhere near 5%. And then the pension funding schedule, we're increasing that almost at a rate of 7.5%. Is that right, Melissa?
Yep.
So this is what we call our budget busters, and this really impacts our ability to fund. This creates that structural gap in revenues and expenses. This is a big factor in addition to the wages that we pay our employees. In non-departmental is our operating reserve fund. So every year, the advisory committee, this is also established in law, are given a certain amount of money that if there are emergencies, quite often when we have snowstorms or hurricanes or fires or something like that, and there was an unanticipated or unforeseen expense, there's a certain amount of money that's set aside in an operating reserve. Once the fiscal year is over, that reserve goes away. It doesn't persist. And that is given to the advisory committee to allocate throughout the year. I would say almost every year we seek a reserve fund transfer for snow and ice expenses because the town strategically likes to keep its snow and ice budget a little lower. What are some of the other things, Melissa, that the operating reserve fund has covered in other years?
So in years past, we've had, a microburst storm that all the trees that we need to clean up after a storm like that would be something that might be covered. We've had some overages in departments that had, unforeseen overtime costs as a result of, an issue in the department that may be covered. A variety of things. We've had a fire truck once that broke down that we needed to replace. That was also a reserve fund request as well.
As part of this category, we have our debt and interest. That's a lot, as you saw in the tax levy. That was just the amount covered by debt exclusions. But we issue bonds that are not excluded under the tax levy all the time for projects, and the principal and interest payments are included in this category, as well as some special funds. Moving on to the next category of expenditures, special appropriations. So this is where special appropriations is in the purple and represents about 2.5% of the overall. And this is our capital projects that we're funding through actual cash, if you will, direct appropriations or the issuance of debt. These are the actual projects that that we're funding. Fire trucks is something Melissa mentioned. We are trying to replace our major equipment on a regular basis. And so the cost of doing that, the capital budget, so to speak, is part of this. Is what these special appropriations are, effectively the capital budget. Okay, and then we have a category called non-appropriated, but we have to account for it. So town meeting is not required to appropriate this, but the state is saying to us, you owe us this money, so you have to raise this when you pass your budget. And so, for example, the MBTA, the town, all the cities and towns within the MBTA district are allocated a certain percentage of the MBTA's budget through an assessment. That's part of the non-appropriated, where we just have to add it. The state tells us how much it is. State tells us how much our Norfolk County assessment is, which really hurts because that's over $1 million, and we really don't get a lot from Norfolk County. We can talk about that. Probably will come up in the question and answers. But that's the final part of our expenditures. You won't see that on the budget that the town meeting appropriates, but when we produce the town's budget, we always make sure we're covering these non-appropriate expenses as part of the overall budget we have to raise. All right, so now we've talked about all the revenues and expenses. So we pass a budget in fiscal 21. We pass a large budget, and then we have to apportion the taxes. So this is a part that we don't talk a lot about, I think, but it's really important, and I want to tell you why. So the actual calculation of a tax rate is not very difficult. What you do is you see how much you need to raise in your budget, how much is covered by state aid and everything else, and the net remaining amount is what you cover through your taxes. And the tax rate is a simple calculation of how much that amount you need to raise divided by the overall value of the property, and you derive a tax rate. But in Massachusetts, we are allowed, in fact, we're required to consider whether we want to take that amount of money, excuse me, and reallocate it amongst the taxpayers in the community. And that's done through two mechanisms. And this is only the select board. It doesn't go through town meeting. The select board each year, after the tax rate, how much we need to raise is determined, they have to convene and work with the Board of Assessors to determine whether we're going to take our tax rate and modify it to some extent to be more progressive or to achieve some goals. And that's done in two ways. The first one is called tax classification. And that decides whether the town's taxes, there should be a differential between residential and business classes. And in fact, the town does that. So the tax rate that we charge residential taxpayers is lower than the tax rate we charge our businesses, who are businesses that are in that class of taxpayers. That's called tax classification. Then we also have, within the residential sector alone, is a thing called a residential exemption. And basically that equalizes the burden of the residential tax base by allowing lower valued properties to get a tax break or to get an exemption. The important thing about these two things, both the residential, both the tax classification between residential and businesses, as well as the residential exemption among the residential classes, they do not increase the tax levy. It just allocates the money amongst the classes of taxpayers. But it's a really important decision each year. It's solely under the select board's discretion. It's relatively, unexplained, or, it's a lot of people don't understand it. It's a complicated thing, but the town uses it. It doesn't increase money, but it allows the town to allocate it differently. So for example, if the town is in a position of putting an override or debt exclusions in question, it can use this mechanism each year, to perhaps modify the impact of that decisions among the taxpayers. I'm sure there'll be some questions about that, and we'll move on in a bit on that one. So probably what most of you are here to learn about, to advocate about, is next year's budget, which would be fiscal year 2022, and that would start on July 1st of 21 and go through June 30th of 2022. That's our 12-month fiscal year. And the table that you see in front of you is a summary table of a very early projection of our budget for next year. We did this to the select board a couple weeks ago, and it's constantly in flux. And until my budget is produced on February 15th, this constantly changes. But I wanted to show you where it was a couple weeks ago, and it's not pretty. It's a very difficult outlook for the budget. Our revenues are being constrained, especially our local receipts and our state aid. And our expenses are going up higher than the rate of inflation, especially in the school department, which is really under the gun to produce this hybrid form of school education in a pandemic. So there's tons of assumptions in here that are constantly being evaluated. That's another reason why we use the town school partnership. We try to bounce some of these assumptions off of them, get some feedback. But the budget, as you see, would create a deficit of about almost $9.6 million, or excuse me, an $11 million deficit, depending on how big the expenditure increase is going to be between town and schools. So you see the school budget deficit very large, and that's because their budget increase is, or their projected expense increase is going up by 7.4%. So this budget deficit is a real concern of ours. We have frankly, we go back to the table. Frankly, we have a budget deficit at this time every year. but it's not this large. And quite often there's assumptions that we hope that will, we're too conservative now, but as the town goes through its budget process, they become better. We're afraid for fiscal 22 that that's not the case. And so we're being very conservative. And that's why you see this large budget deficit. Again, we have 4 more weeks to go before I put my budget together. And then we have a few months to go before the actual town budget is approved. So there's a lot of changes that will happen between now and then. But as I've said, we're very worried about our situation this year. However, there's always hope. And I read this afternoon that our president-elect and we'll be proposing almost a $2 trillion bailout bill, if you will, related to the pandemic that would include revenue for state and local governments. And that's what we were hoping that Congress would have done with the last pandemic stimulus, which they refer to as the CARES Act. That did not include any general revenue replacement for us. It just included pandemic-related expenses. So we're hopeful that Congress will see its way to develop a bill funding for state and local governments that will really help here. If not, let's go to the next slide. What we're really looking at is, whether we will tap into our reserves to offset that deficit. We could also do an override, and we talked about an override, and I'm sure there's some folks talking about it. But quite honestly, I think overrides are very difficult in this time frame, given the recession, the unemployment, and also the fact that we hit the taxes pretty hard this past year with our debt exclusions, and that will continue on into the future as we talk about the Driscoll School and other school. So really what I think the town is going to be faced with, we talked about it last year and we knew this day was coming, is this the year that we kind of destabilize ourselves and take money from our stabilization fund or not put money into the OPEB or other things like that. That concerns me. It concerns Gina Franconi a lot, who has to deal with the bond rating agencies. But the fact of the matter is we're in a rough spot. And this may be the year that we choose to use some of these reserves. I will tell you that if we use the reserves, we're going to get dinged by our bond rating agencies. So we have to be very careful. And what we have to show the rating agencies that this is a temporary use of these reserves and that we have a plan once the pandemic is over to rebuild the town's reserves and fiscal stability. So I know there's going to be a lot of discussion about that this year in relation to the fiscal 22 budget. Just to review the budget calendar and where we're at. So we've already begun, actually the budget is year-round. It used to be starting in the summer, but frankly, it's a year-round process. But we begin the summer with the CIP, the capital improvement planning process. And then as the fall emerges, I start to meet with the town and school partnership, and we start to produce some of these projections and talk about priorities and goals to help inform me to put together the budget. And then in late November and early December is when we actually make our first projection of the forecast and the preliminary CIP, and that's what generated that $11 million deficit. In January and February, there's some work on the CIP, but then we wait in mid-January, we get the governor's budget. In a couple of weeks, we're going to get that, and then continue to meet with the town school partnership. This year, we've been meeting more than regular. And then on February 15th, I will submit my overall financial plan to the Select Board and Advisory Committee. And then really for the remainder of the winter and into the spring, the Select Board and Advisory Committee are doing their parallel process. We're changing the budget as the state may change numbers, or in this case, if Congress provides. And then late May, we're going to town meeting with the final budget. And we have to approve our budget before the end of June. This past year, we went right to the end. I think it was like the 28th or 29th. because of the pandemic and because we had to hold our remote town meeting. So that's the overall budget calendar. I want to put this out there. I've gone through this stuff very quickly. There's a lot of complicated concepts and things, but there are some really important documents that are out there. BFAC used all of those. So the financial plan itself, or the budget, the financial plan, which is the document, it's mostly an online document, but this is how it's been produced in the past. It's a very large document, and there is a lot in there. It's just not a budget. It's a lot of information. And I would invariably, when people ask questions, and the questions you asked tonight, we'll say, you could probably find that on page, whatever of the financial plan. Now, that's not to suggest you should be reading the whole financial plan, but it's a great reference document. And there's one put together for every year. There's the audit report that's produced every year, especially a portion of the audit report referred to as Management Discussion and Analysis, or MDA, and it's a really good overview of the town's finances. When you read the audit, it doesn't quite match the budget. There's different terms, and the audit's looking at different things than the budget, but it's really an important document, and it really tells a picture of the town's financial strength and its reserves. The town meeting combined report. So before every town meeting, we produce a report that explains what the article is, including the budget article, and then provides reports, an explanation, and then a report, especially advisory committee report under the budget article. That's what if you're interested in the budget, you should read that advisory committee report from prior years, especially fiscal 21. And they do a wonderful job in reporting and analyzing the budget every year. The BFAC report, which is out, it was produced, I believe, last December, and it's a great report. That's out there on the line. Bond prospectus. So when we go out to the bond market, those rating agencies, typically Moody's, when they say we're a AAA bond rated, they will produce a report and say why. Why do we consider Brookline a AAA, and why are they going to get a lower interest rate when they go to the bond market than, say, the town of Dedham or somewhere else? They really get into the details of why they look at the town's creditworthiness, and what are some of the weaknesses, or what are some of the trends that they're worried about, because they'll say that. And that's what BFAC really focused on. They looked at the bond ratings a lot to tell the story of the town's overall fiscal health. And then finally, DOR refers to Department of Revenue. It's a state agency. The Department of Revenue is the state agency that primarily regulates municipal finance and our budgets. And so there's a DOR bulletin, or a IGR, which is, I think, the acronym for Intergovernmental Report or something like that, on everything. So you want to learn about Proposition 2.5, the DOR has a report on that. If you want to learn about tax classification or the residential exemption, there's a report on that, a statewide report. So I find those really helpful. So that is the extent of my presentation. It's gone on long enough. We really want to spend the rest of the night listening to you and engaging with the public. Devin Fields is going to moderate that. Devin, why don't you help me move into the Q&A and period.
Sure. So we have a list of about 8 questions in the Q&A right now. I'm going to promote people in a first come, first serve opportunity, and you can ask the question that you've put in the Q&A or an additional question. You'll have 3 minutes total. So the first person with a question in the Q&A is Lisa Cunningham. Lisa, you have been promoted to a panelist. You can unmute and share your screen when you're comfortable.
Hi, Devin. Could you read aloud my question? I think it was about the pension liability for the schools. Can you read it for me? Thank you. Of course. I'm sorry, the camera on this computer is not working.
No, that's okay. Is the school department responsible for their own pension liability, or is the town?
First of all, that's a yes or no question, because school teachers are covered under the state pension system. So fortunately, if you're a teacher in Massachusetts, the state government is covering the pension obligations for teachers. But of course, a school department has more than teachers. It has administrators, it has custodians, it has all sorts of employees. So if you're a non-teaching personnel, you are covered, and the school department has to account for those pensions in the town's budget.
Great. The next person with a question is Miriam Ashkenazi. Miriam, you've been promoted to a panelist, and you can unmute and share your video when you're comfortable.
Thank you. Being as I never managed to get dressed today, I will not be sharing my video. First, I want to thank you. I actually think this has been excellent, very informative. I have two questions. The first is, what piece of pie do we pay settlements out of? And the second, and I'm sorry if you said this and I missed it, but how much do we have in our reserve fund? Thank you.
Thank you. Good questions, Miriam. Melissa, help me.
Sure.
Let's do the reserve fund first. How much is
so reserve fund in a normal year, a reserve fund, the target for the reserve fund is 1% of prior year net revenue, which comes out to about $2.8 million. So obviously, given that we were going through some uncertainty with pandemic related expenses and other issues that would be happening because of COVID, the advisory committee increased that number, and then we modified it in November. So the reserve fund is about $3.6 million. In terms of settlements, the settlements can come from a variety of places. The town council budget does have a claims and settlement line item where they can pay like smaller claims that that are filed with the town. The town also has a liability fund. And so the liability fund, the town is self-insured. So a lot of claims would be paid out of the liability fund. And that also has the same target of 1% of prior year net revenue.
Melissa, where is the liability fund appropriated? In what category of the budget?
So we, we have an allocation in the budget to meet the target, but the fund itself is, it operates like a trust fund.
Okay, so we occasionally appropriate money towards this liability fund
in order to meet the target, because as you pay out claims, you need to bring and then it also as revenue grows, the target increases. So,
yeah. I think it's a good point, Miriam, a good question. I do, and Melissa mentioned that we're self-insured. Now, we buy property insurance for our buildings, and some of our expensive vehicles we have insurance for, but we're an organization that's large enough to self-insure our liability, and that's why we have to have reserves and things like that. And so I wanted to make that clear. We've talked about maybe having umbrella policies to cover some really outlandish expenses or whatever. But the fact of the matter is that that the town has a limitation on liability. So because we're a municipality, the state allows us to cap our liability, not in terms of other things like civil rights cases and other things, but for example, if you slipped and fell or your car hit a pothole, we are limited as to that liability. So that's another reason why we can self-insure. So thanks for asking that question.
Thank you very much.
I should also add too that we also have other types of claims like workers' comp. We have a workers' comp trust fund for those claims. So that it's a few different places within the town budget, but primarily the liability fund and the town council budget would be the major sources.
The next person with a question is Bonnie Bastian. Bonnie, you've been promoted to a panelist, and you can unmute when you're ready.
Hey everyone, my daughter is knocking on the door. I lost my question in the chat or in the Q&A, but I wanted to know if you could explain what the money goes to for the Norfolk County assessment.
That's a great question. And primarily, I would, the county government in Massachusetts is not what it used to be. 100 years ago, counties were an important component of government in Massachusetts. They provided direct services. That's no longer the case. However, they were in place for so long, they have some legacy costs. So if you were an employee of the county, for example, you're getting your pension. So there's ongoing costs. The state has actually eliminated some counties. They eliminated Middlesex County, and that's what makes us so angry to be part of Norfolk County, because we feel like the state, did it for other parts of the state. They eliminated Middlesex County, no longer a burden for those communities in Middlesex County to pay a county assessment. But here we are in Norfolk County, and we're paying over $1 million. We're the largest community assessment because it's based on property value. We're not even contiguous to any other Norfolk County community. Really, the seat of the county, is in the Norfolk, Dedham, Milton area. So, it's not a great thing. And the town meeting and the advisory committee has tried to address it for many years. We really get very little money from Norfolk County. Norfolk County runs a high school, an agricultural school. So we get discounted tuition for the one person that's gone there for the last few years. So Norfolk County is definitely a sore subject with the town. I'm sure others can talk about it, but it's an area where we are really concerned that we don't get any value, or we get very little value for that expenditure.
And Mel, I don't know if you recall that recently, I think Hampshire County was just dissolved, and the state took on the obligation for that county. So, we've had warrant articles filed to try and get the town out of it. It's something that has been, on the agenda for a while. It's definitely frustrating to see such a large piece of the town budget go, for an obligation that the state assumes for a lot of other areas.
May I ask a follow-up?
Of course.
Yes, you still have to.
Okay. That money does not go to Norfolk County prisons and the sheriff's office?
I don't believe so. I believe the prisons, although they are referred to as county and there's a county sheriff, I believe that's a state expense.
Okay, thank you.
You're welcome.
The next person with a question is Ryan Black. Ryan, you've been promoted and can unmute and share your video when you're ready.
Hi, thank you. Actually, is it okay if I ask a slightly different question than what I put in the chat?
Of course.
Yeah. So my question is essentially, it's kind of open-ended, so feel free to interpret it, but could you speak to kind of like the way Brookline allocates property taxes? Can you speak to what we're doing to ensure those with the greatest ability to pay are paying? For example, non-small business owners, rich homeowners, like to essentially alleviate the burden on renters, of course, who experience property taxes in the form of landlords get increased property taxes who then pass it on increased rents, lower income houses, and then, of course, small businesses. Because I know there's a few exemptions which exist in the state budget. For example, I think there's like a 10% exemption for small businesses. Some towns like Provincetown, for example, have pursued a residential tax exemption, which then extends the exemption to properties with full-time renters. So I'm just wondering if you could speak, just what policies, like what approaches are we taking to, like I said, make sure those with the greatest means to pay are paying?
Good. Good question, Ryan. So in general, the state does not allow us to do that, but there are two ways we can do it. And I tried to talk about them when we talk about property tax. One is this residential exemption. It is that Provincetown vehicle. Brookline also does that. There's very few communities that adopt the residential exemption because for Provincetown and the Cape communities, they have a lot of non-resident homeowners, and they don't want to have their residents burdened. In Brookline, we have a lot of renters. We have a lot of non-homeowner, non-property, and so residential exemptions or for condos we do create, and so there is that differential. The lower your value is, the more you'll get a break from this residential exemption. So we have that. That, to my knowledge, is really the only avenue for us on the residential side. We don't have the ability to say small businesses get one tax rate and large businesses get another tax rate. We can vary the tax rate between residents and businesses, but among the businesses, we can only levy or assess that single residential tax. There are some exemptions, but mostly there's on state income tax, not local property tax. The only exemptions we can offer, Ryan, are the ones that the state legislature allows us. We can't create our own.
I understand that. Yeah, I was referring to essentially lobbying the state legislature for a similar exemption that Provincetown has gotten. But is it okay if I ask a point of clarification?
Go ahead.
Yeah. So we have a residential tax exemption currently, correct?
That is correct.
Yep. And we currently do not extend it to properties with full-time rentals, right?
Say that again.
So say a landlord doesn't live in their apartment building. The
They
apartment.
cannot get it.
Yep. Okay.
It has to be someone who lives in the property that is being.
I was essentially just asking if we had pursued the Provincetown path, but thank you.
Yeah, thank you, Ryan.
The next question is coming from Linda Pelkey. Linda, you have been promoted to a panelist and can unmute when you're ready.
Hello. Thank you, Mel and Melissa, for doing this. My question is there such a thing as a rooms tax for short-term rentals that is local option? And if so, have we adopted it? And how much percent is the tax? And if we haven't, why haven't we? And I guess that's it.
So we currently collect the local option for short-term rental properties. When the law was passed, we didn't have to adopt anything. The hotel motel tax applied to these units. So we're currently collecting for the units that are registered with the state. What you're probably referring to is the community impact fee, which is additional on top of the local option tax. And so I believe that, given that Airbnb type industries aren't currently regulated in town, that adoption would likely happen if the town chose to regulate the industry.
And is that a variable percentage rate or what? How much would it be?
I don't recall the specifics of what the rate is. I can get back to you on that though.
And can the funds go into the general fund?
I believe that there's a prescriptive use of some of the funds. So I can provide you a link to the legislation on that.
Thank you.
The next question is from Marissa Vogt. Marissa, you've been promoted to a panelist and can unmute when you're ready.
Hi, thanks for doing this. So I was just wondering, you mentioned the possibility of having to dip into the reserve fund and that this might be the year. And I was wondering if you could give us a little more context about the reserve fund, like how much is in it, and have we recently, in the past decade or so, have we dipped into it, or just can you give me a brief history of the reserve fund, what we've used it for?
Sure. Let's call it the stabilization fund, because the reserve fund, even though stabilization fund is a reserve fund, the reserve fund is that $2 or $3 million fund that's available to the advisory committee to allocate throughout the fiscal year. The stabilization fund, I've been here for 10 years. We've not touched it in that time frame. We haven't put a lot of money into it, but we have put some money into it, but we have not taken money out. And one of the reasons is because one of the benchmarks that the bond rating agency says is, really 10% of your budget ought to be in reserves. And that includes the stabilization fund and some other things. And we're always trying to get back up to that 10%. And so we have not taken out any funds from the stabilization fund in my tenure with the town.
It's about $8.5 million that's currently in the stabilization fund. So clearly not enough to solve our deficit.
All right, Tommy Vitolo, Representative Vitolo is here and mentioned he could weigh in on any state related funding questions.
Sure, and actually, I will add that just today, Governor Baker signed the economic development bill the legislature passed a week ago, and there's a lot in there to unpack. One of the things is an increased fee on Uber and Lyft rides, which hits Brookline harder than most communities. However, 1/4 of the revenue stays in Brookline. And so based on 2019 numbers, pre-pandemic numbers, Brookline will see something like $500,000 of additional, several $100,000 of additional revenue from that alone. So that's not enough to fill the hole, but it certainly helps.
And we typically use those funds to support projects that would be going through our capital improvement plan as well.
Thank you, Tom. Thank you for all you do for the town. Representative Vitolo is constantly looking out for the interests of the town and is constantly collaborating with us on strategies to help us.
The next question is from Addie. Addie, you've been promoted to a panelist and can unmute and share your video when you're ready.
Yeah, good evening all. I just got a question in two parts. It's been almost, it's been over a year that Article 29 has been passed for the IAF fund. So I would like to know what's going on with that for the IAF fund. That's number one. Number two, who's going to be overseeing the oversight on implementation of the IAF fund? Because it's been taking a little bit longer than expected now. Thank you.
Ade, could you clarify? I'm not familiar with that terminology, IAF.
REAF fund from the Article
REAF.
29 passed about
this is the racial equity advancement.
Yeah, the racial equity.
Yeah. Okay. So I think earlier we talked about cannabis as we have the ability to generate a sales tax of up to 3%, which we are doing, and that is going into the general fund of the town for general purposes. But we also are able to levy mitigation fees up to 3% also on the vendors or the licensed establishments, and that is where we have set aside money for the Racial Equity Advancement Fund. I think we have close to $800,000 in reserves, of which much of that will be used for the Racial Equity Advancement Fund. Who's going to be in charge of it is a good question. I know the Diversity, Inclusion, and Community Relations Department has been and Commission have been working on guidelines. It is possible that we might use a nonprofit partner, whether it's the community foundation or some other entity who's used to dispersing funds. And, a lot of this is confidential or, could be, we don't want to go through the town. So that's where it's at. In terms of timing, I think we're ready at the next town meeting to appropriate that money into the fund.
Okay, just a follow up to that. Are we allowed to use the impact fee for the IAF fund? Because I was under the impression that when it was passed, nobody said it wasn't discussed to be taken out from the stabilization fund. I thought that was a 15% kind of a different bucket and was supposed to be created specifically for that, not taken out of something else.
Well, we did create that stabilization fund at our last town meeting, and that's what I'm referring to. How much is in that fund, Melissa?
So it'll start to accrue in fiscal 22. So we will basically be looking to use some free cash that was from host community money to fund appropriations going into 22. And then once funds accrue in the stabilization fund, that will be the ongoing source for mitigation related activities. And that is one of the activities that we believe meets the mitigation of the industry.
I would say, however, that, there is dispute about that. And, it's possible that either the state through the Cannabis Control Commission or maybe litigation or some other things would say that we can't use that fund. Our feeling, my personal feeling, is the cannabis industry and the legislation that established that in Massachusetts was intended to address some of the negative consequences on the war on drugs over the last, especially marijuana, which really really impacted people of color and minority communities a lot harder. And so we think that using the cannabis mitigation funds are totally appropriate for a racial equity fund as we've contemplated. I know it's taking a little longer to get done, but I also just want to say that it's not a done thing, not a sure thing. We might have to fight for it.
The next question is from Liz Neal. Liz, you've been promoted to a panelist and can unmute when you're ready.
Hey everybody, thank you so much for doing this. This has been so helpful already. 2 questions. I'll just ask them one at a time because they're separate. Can you please go over the remaining opportunities for public input into the FY22 budget prior to your submittal deadline on February 15th, and then also prior to town meeting in May?
I'm in, Melissa and I are in total budget mode. So if you don't, if you have something, I would encourage you to submit it to me or her as soon as possible. But that's not the end of the game, as I mentioned. Once my budget is released on February 15th, it immediately goes into the select board and the advisory committee process, where they're constantly conducting public hearings and opportunities to discuss it. So I would say if you have things you want to let me know, now's the time. And if you don't do it tonight, please feel free to submit it in writing or through email. And then after that, I think it moves to the select board and advisory committee. And then, of course, if it's a school related thing, you want to talk to the school committee as well.
I would just add also that boards and commissions are also very good advocates for departments. So, if you express your interests at a board and commission committee meeting, that also could get traction as well. So there's definitely plenty of opportunities to provide input.
Excellent, thank you. And my next question is somewhat related. Last year for FY21, I remember at town meeting it came up that all town departments were asked to submit a provisionary 10% reduction to their proposed budgets. Of course, not all of those were implemented, but it would be useful for those of us looking towards FY22 if we could see those proposed reductions in the departmental budgets. I'm wondering if they are publicly available.
They are, I guess they are, Liz. I personally have a problem with that because, when I'm asking my departments to be creative, I really don't want them to be, stymied or hold back because the planning and the discussions we have will become public. So, it's a kind of a fine line. I really want them to be open and throw things out that we can kind of throw around. But if it was found that, the police chief said something, and then it came out publicly, it's a little embarrassing. But the fact of the matter is they are public documents. The police department's 10% exercise last year has been revealed. So if you want one, you can ask for it. I'm not going to post them, on the website or anything like that.
Thank you.
The collaboration that we need from department heads, we need to give them the freedom to be creative and to really work with us on what the flexibility is.
Absolutely. I totally understand that. You will be getting an email from me shortly. Thank you.
The next question is coming from Danelle O'Neill. Danelle, you've been promoted to a panelist.
Good evening. Donald O'Neill, town meeting member on the AC. I call you guys the Mills. I appreciate y'all. Okay, thank you for doing this. There's a lot of people watching this and taking it all in. I really appreciate y'all for doing this. Hopefully we can do this again one more time before town meeting. So my question is, I'm gonna speak on what Ade was asking earlier. When I decided and Raul became the co-petitioner for the REF fund, the Racial Equity Advancement Fund, at town meeting, the biggest argument that was given was it allowed to set that money aside for a certain group if it wasn't part of the impact fee, agreement. So I don't, and that was the biggest argument that I heard, and that's the reason why the language changed in the resolution to make it not host community agreement money or impact fee money, but local sales tax revenue. So up to 35% of this local sales tax revenue. So I don't know. I guess my question is Brookline considered a disproportionately impacted community in regards, or do we even by state, like, do we even have to listen to that? You know what I mean? What was, because initially the reason why I wanted the REF fund, and it was hoping for it to originally come out the host community agreement money, because I figured the minorities were impacted, disproportionately on the war on drugs. But like I said, the argument at town meeting was we were not allowed to, by state law or, stop me if I'm wrong.
Janelle,
you know what I mean?
I recall that we originally, the resolution originally tried to use sales tax funds, and then the argument was made that the sales tax had already been earmarked for school purposes via the override plan, and so that's when we looked at host community as being the funding source. But
I think Danelle is right. I think initially, we expressed these reservations about whether host community impact fees could be used, and I think we've come around on that. And the fact of the matter is, the sales tax, we have so many needs for the general revenue that we think it's better to use the host. I feel it's better to use the host community.
I agree. I agree, Mel. And so, I mean, that's the reason why the whole REF fund came. So if we as a town have that power to do that, right? And I mean, maybe, I don't know if Tommy's still on the line, if he could chime in, but if we can do that, can we, and I understand now about the whole stabilization, I get it now. You know what I mean? If we're allowed to do it. I just don't understand why we had that argument at town meeting.
Well, because it was early, and the industry is new and the law was new. I think there was a conservative. I still tell you, it's not a slam dunk.
Okay.
There's going to be challenges, but I believe with Tommy's support and others, we can make that case. If we can't, we're going to have to reevaluate things. But
I'm sorry, Mel. I don't mean to interrupt you. Maybe like arrest records for marijuana. You know what I mean? Maybe that could help. So how many? I don't know.
I'll tell you one thing that I feel that is a good justification for the town, and that is, you all know that Brookline was hammered with impacts from host communities because we were the first and only one in the greater Boston area that's accessible by T for months, almost a year.
Yeah.
That was a very burdensome period of time. I don't have to tell the people in Brookline Village about it.
Yeah.
And I feel that period of time, we really generated much more host community impact fees that we really couldn't spend. And that unique situation that the town found itself in, being the only host community for so many months, I think provides us with a little different perspective and justification to use those so-called excess community mitigation funds for this purpose. So we're going to fight for it. And
I appreciate it.
We're in the game right now. That's why we set aside the money. We really want to make the REAF happen.
I appreciate you saying that, and I'll do. Let me know whatever I can do to assist in ensuring that happens, please, Mel. Okay.
Thank you, Janelle.
Thank you.
The next person with a question is Zane Taganami. You've been promoted to a panelist and can unmute and share your video when you're comfortable.
Hi all, thanks for hosting this, and I really hope there's similar public education opportunities and campaigns like this in the future. It's come to my attention that the Comcast Special Essential Program for low-income households in town and across the country actually is only 25 megabytes per second, and in almost in every case, not adequate speed for young people to do their live Zoom online classwork. I'm curious if the town has any intentions of allocating money for these much needed improvements to the internet services Brookline residents and BHA properties in particular use.
Well, I would doubt we would do it for, general residents who because I believe you can acquire higher levels of, but for those who are living in subsidized housing, for example, we've been having a lot of discussions with the Housing Authority and are collaborating on opportunity. I didn't realize the program that you're referring to is limited in bandwidth in that way. So something I've been talking with Michael Alperin, the new director of the Housing Authority. He seems really focused and understands it pretty well. So I'm kind of relying on him to develop a solution. But the answer is yes, we would consider whether using our general revenue or perhaps some of our federal grants for that purpose.
Thank you.
The last question is from Lisa Cunningham. Lisa, you have been promoted to a panelist and can unmute and share your video when you're comfortable, or not share your video, whatever you want to do.
Thanks. I have no video to share, unfortunately. Thank you, Melissa, and thank you, Mel and Devin, for the great presentation. Very much appreciated. Although the governor did not pass the housing choice bill, did pass the housing choice bill, as Tommy mentioned. The climate bill was unfortunately vetoed by Governor Baker. The House Speaker has promised to refile it again, but everything is really up in the air and uncertain. So getting to my budget question, what percentage of the town budget goes towards sustainability and climate mitigation efforts? Is there a line item in the budget devoted to sustainability and climate efforts, or how is this town priority reflected in the town budget?
Sure.
Thank you again for your presentation.
Yes, thank you for your comments, Lisa. Again, the sustainability and climate is, something that's the town has clearly identified a priority, and we're slowly beginning to develop a capacity for that. That's not to say that we don't have money throughout the budget allocated for a lot of these things, but I think you'll see next year the first potentially a program, because we've added a new division to the planning department called sustainability. So I believe you're going to be seeing more of those costs aggregated in a program similar to the other programs I referred to, but it's still early. I can't speak definitively about that, Lisa. And if you're asking me how much, I'm not prepared to sort of go through the budget, and a lot of it would be, more art than science, deciding what we consider to be climate related or sustainability. So good question. I think given the priority of the town, we do have to do that. We do have to start quantifying and accounting for our commitment.
Thank you very much. Appreciate it.
You're welcome. Is that it, Devin?
So that was the final question in the Q&A, and there have been a lot of grateful attendees saying good job and thank you to Melissa and Mel for the presentation. But as Mel mentioned earlier, folks can feel free to submit any additional questions via email.
I would also note that this forum is being recorded, and it will be placed on the web so anybody can watch it over again or watch it for the first time. And we'll continue to work on the PowerPoint presentation. I noticed a few little errors here and there, but we'll try to put that separately as a document. So, I heard, can we do this more? And I think we do need to do that. I decided to do it on my own. I think the Select Board and Advisory Committee are all talking about ways to do this. There's a concept called the Budget Summit. That's more of an interactive forum. So I'm eager, and BFAC, if anything, of many things, BFAC's recommendation in this area really took hold with me, because the community, the budget is, and the town exists for the people who live in the community. And we want to have our budget reflect the priorities of the community, and so on. I also want to make one further thank you, and that is to BIG, the Brookline Interactive Group. We have many heroes in the pandemic, many heroes. I'm keeping a list. One of those is BIG, the Brookline Interactive Group, who was able to help provide the technology solutions to have the kind of remote participation that we have. And I will tell you, for those of you who don't know, Brookline is so ahead of every other community, and that's why I think we're getting proposals to continue this after the pandemic is over, because it has some really significant improvements in the way we're communicating and engaging with our public. So thank you, Brookline Interactive Group. Thank you, Melissa, Devin, to Gina and Justin, who are out there, but also to the boards and committees that I mentioned who work tirelessly, mostly volunteers, the select board, the school committee, the advisory committee, and all of our boards and commissions. Thank you all, and good night.